It's Thursday, November 20th, just a couple minutes after 12 noon Eastern, and we are back with another edition of Chart the Markets and Just in Time. It is crazy out there, and I want to take a second before we get into the nonsense and the chaos to thank our good friends at FEG Token and at smartdefi.com, and of course, our exchange partners at BYDFi. And head over to BYDFi, grab yourself an account with the code capital K, 5, capital Z, 4, capital T, lowercase p, and new users are eligible for our trading bonuses that we give away every week. But now that we've done the housekeeping, let's get into the good stuff, because all of a sudden, not long before we've gone live here, things let go. But we quite honestly can't be surprised. We can be a little bit stunned. We can be a little bit taken aback. But we by no means can say that we are surprised. Why is that? Well, quite simply, we have been here taking you through the process of where price may likely go during this breakdown. We work off a methodology that's based on fibs, fractals, and filters. What does that mean? Well, the Fibonacci's we use for retracements and extensions. We'll talk more about that another time. We use fractal analysis, multiple time frames, basically starting with that larger time frame, opening it up and looking inside to see what we find, just like a nesting doll. And what we see on one time frame, we will see on another, whether it be, a weekly, a daily, the 12-hour, doesn't really matter. Price behaves in the same way. And if we just go back to our daily Bitcoin chart just for a moment, what do we talk about on a regular basis? We of these major moving averages, especially this level in here, is support, right? You have to know that. When you start to break these levels, you break one level and you find the next. And that's really what's happened here. And we have been walking you through this really the entire time that it's been going on. So, if we go back about a month, I think it was, we talked about having a level in the 80s. And I kind of went back and looked, and again, I think it was about 5 or 6 streams ago, but we go back and I remember saying, and I checked, that's not today's problem. Could be tomorrow's. Well, tomorrow's here, right? And how did we get there? We get there simply by walking ourselves down the stairs. This daily chart, once you break the 50, we know that, hey, that's the ice. We don't want to break the ice. It's really hard to get above the ice again. We're very well aware of what trend is, because we use as a filter the T line and the 5 EMA. The T line being the 8 EMA. The yellow is always the 8. The 5 changes colors. When it's white, it's bullish. When it's red, it's bearish. And the divergence between the two tell us that the market itself was still moving down. Now, nobody wants to hear you're coming back, price could come back to the 20-day moving average. Nobody wants to hear it can come back to the 50 or the 200. And what is the 200? It's our basic bull-bear indicator on any time frame. in that when we break it, that is bearish. It's a bearish takeaway. And here we are now. Did we break one level and find the next? Yes, right? Impulse down. You know, you test again up here. First attempts typically fail. That's what happened. You came back to the 200, except this time you can't stick. Breaking or failing, you know, the 50 and 100, that's a pretty solid level. The 200 and the 20, also a solid level. But what you're noticing is that you're making these lower highs, lower lows. Like that in itself is, you know, a bearish wave, a bearish trend. And the whole time it was going on, what do we tell you? Each and every session, pay attention to the divergence between the T-line and the 5 EMA. It's telling you everything you need to know. Oh, well, Blunt, you're full of shit. Even though you come in here like every week, right? That's nonsense. It's not going to go down that far. Oh, yeah? Price will do exactly what you don't think it can do when the least opportune time for it to do it to you. It's always the way. This was telling you that this trend, no matter how much you didn't like it, was still down. Breaking major levels. Why do we use these major moving averages as targets? Because they're draws for price. And at least you have some sort of rationale and methodology to set targets at, which will help you frame a trading strategy and methodology all into yourself. But what will always be consistent is how price behaves like this. Did you break trend with this move here from, you know, 100,900 to 106? No. And whoosh, drops like a stone. Right here was our other level that we played around at, 94.4, knowing that the 500 was down here, which it would likely be a draw. And look, see how it price bounced there for a little bit? That's where the past price is. Does the same thing where that major moving average is for the same reason. What's it looking for to the downside? Well, there's the 1,000-day moving average. Does that seem so batshit crazy now? I don't think so. But everyone will still be in denial that isn't in play. Well, they were in denial that this level was in play. So, you know, here we are. Price doesn't care what we think. It's going to do what it's going to do, and we can tell what it's going to do just by watching it on the chart. That's all we need to know. So we said if price breaks the 200, which it did, it's likely to find the next level down. It found some past price, yes. Found it again here. There was our other target, and if it doesn't hold that, what happens? It looks for the next level down, rinse, repeat. And the only thing that prevents these levels from being tagged will be an influx of money coming in to change the trend and push price higher. But until that happens, and you just get more of this, expect price to continue to move south. But let's look at the weekly. There's the weekly Bitcoin chart. Super, like, look, here's your staircase up, nice. Break the 20. Okay, look for the next level down. There's the 50. Well, we tagged that and broke that. Looking for the next level down. I believe that's 82.9, somewhere in that neighborhood is a target. And what lines up there? You've got these candles to the left, and quite honestly, the 74 level connecting this top of this wick from March of 24 to the bottom of the wick from April of 25, you know, essentially a year, that is actually back in play. This is kind of a structural level in here. So I'm looking to see what happens when it comes back to the 100 on the weekly, and then if it doesn't hold, this is a structural level, so we'll look for something there. Failing the structure, you continue to look down, and there's the 200 at 55.6. Now, when I look at these charts, based on how I analyze price on a chart, this kind of stuff is terrifying in many respects, unless you're short, because these levels have been spread out so far. Based on that, we don't complain about the parabolic price on the way up, do we? We couldn't find anything wrong with that if we tried. But when price does roll over and retrace, it feels very different. But knowing that current price revisits past, knowing that those first attempts, typically get some support, and those second and thirds are more likely to fail. Knowing what happens when price is inside a volume profile, use this one as an example with super light trading. These candles are so heavy because there's nothing here to hold price up. This is dense trading, this dark blue area, with the point of control being the most dense volume. So here's the most dense trading. This is light as a feather. There's nothing here. And it's a little bit gappy to boot. So it makes it structurally impossible or very difficult to hold these candles up with any real support at all. And they just become big red knives. And they will continue to be big red knives until they find a place that they can rest at. But, we've been kind of apologizing a little bit over the last several weeks, saying, geez, you can see the exhaustion and the weight to the downside, and, hate to say it, but we're looking at lower levels. $4,500 dip, that's a lower level. That's a very big lower level. Let's take a look at ETH because, and actually, I think what I'm going to do is I'm going to look at ETH on my trend spider chart, if that's okay. There you go. And there's a reason. I love using both platforms, Trend Spider and TradingView. But using this volume profile here on ETH's weekly chart, you can see the upper value range, the lower value range. There's a VWAP on this, and there's also obviously the point of control, which is that solid purple line. The point of control we know is a draw for price. Doesn't matter if we're looking at stocks or crypto or commodities, doesn't matter. So here we have the point of control down at 2,500 on the weekly chart. When you go to the daily chart, where's that point of control level? Exactly the same place. So remember we said last week or the week before, the fact that the weekly chart and the daily chart had almost the identical level for the point of control was worrisome, because that would be a draw for price on both time frames, right? And that's exactly what looks like is unfolding. If you look at this chart of ETH, where you see this big, move down here, what makes it intense? Instead of being, a slow gradual move to the downside, what makes it intense? How about all this? This big volume gap. This parabolic price created the gap in volume. Now, here you are testing it on the way down. And when you have, again, parabolic price like this, where there's these candles, albeit pretty when they're going up, are filled with fairy dust and air. And on the way down, they can't hold up all of this momentum. This is a lot of momentum. When you see divergence like this, this is really ugly. But price is doing this with velocity because it's falling into gaps. So the next time you see price go parabolic, take your 5 minutes and be happy. And then remind yourself that at some point in time, you'll see something like this take place. It might not be the next day, the next week, or the next month. That's what markets do. They wait for you to fall asleep, lull you into a false sense of security, and then slam you in the head. So I think we're well on our way to that 2,500 level on ETH. And that was a level that probably most people didn't think we'd talk about. Again, here's the Bitcoin on the same time frame on TrendSpider. So that's what, if you don't get any love, any momentum, any money to come in, well, there you go. That's your next level down. And on the weekly, same scenario. Upper value range. Here's the VWAP. This is really interesting. So on this chart, we have, the 20, the 50, the 200. This purple line here is the anchored VWAP for volume. And this here, the solid blue one, and sometimes you'll see it kind of gets a little fat and expanded. That is the anchored VWAP for price. Right? And it kind of, when you see it on your chart, it does look like a moving average to some extent. They are often draws for price. We talked about this a couple of weeks ago, where look how price sat around that anchored VWAP up here for an extended period of time, for like a month or so, and then gave way. And then as it gives way, it's breaking levels, but I believe it's looking for something down here. So the VWAP on Bitcoin's weekly and the anchored VWAP for price are in the same area. And this kind of, you can see how it's trended right into it. And there's the 200, right? And these are all, again, draws for price. You're trading above the upper value range here. So all that's happening is price is coming back to a more comfortable, acceptable level, which is that upper value area. That's kind of what's going on. And because it's gappy, big volume gaps, there's no past volume there to hold price up again. Right? And the beat goes on. Now, I know what you want to talk about. You want to talk about XRP next, because it too is kind of one of those usual suspects, right? This is a chart that nobody, in the XRP world wants to look at, and I get it. Nobody wants to see these things melt, and especially when you've got a large portfolio. But let's just talk about the price on a chart. So after this big move up, price, for all intents and purposes, did a little bit of a sideways move. You can see it's range bound at that 275, and let's say we box it in here at 313 or so. Right, so it's been ranging. Now we talk about using fibs, right? Like, let's just do quick, swing low, swing high kind of deal. And we're looking for 50% retracement and then a move higher is excellent. Like, you're very happy with that. You would like to see the trend take out those highs if you were long, but to get support at that level, you have to be happy with that. The problem is it didn't hold, right? And then you have this big nasty candle from that Friday, we'll call it Black Friday, all the way down to the 1,000-day moving average. Okay, but we know price was never going to stay there. But in the end, and we've talked about this XRP chart in detail, this was a trend that didn't really break to the downside. like it was stayed in its trend. When you broke the 50% level on your fibs, you hate to use this day as the day that it did it, but that's the day it did it. So, there's we can average out some of the chaos, right? But when you break that 50% level, you might expect that there's more downside. This candle, again, was crazy, and I hate to have to use it as an example, but there it is. But you break that 50% level and you start looking at 618. Right? These are natural levels that price might want to spend some time at, and if you can see it or not, that's this level right in here. Okay? So breaking 618 like that, and of course this is the 200 MA, right? 200-day moving average, which you fail. So you're working on this failed breakout that comes back and takes out that previous wave's low, which is what it does. But when you break 618 after breaking 50% and you start looking down to the next level at 786, like this is a round trip right in here. If you don't see, like, are you okay with this retracement? Probably, right? Big parabolic move up and it retraces to an acceptable level at 50%. Yeah, I'm okay hanging around to see what happens next. But when you break 50 and you quickly take out 618 as well and fail your basic bull bear indicator at the 200, you have to understand and acknowledge what's going on your chart. Pretending that's price isn't falling is not helping you. Now, if you're an investor and all you're doing is adding at certain points and you're not concerned about all this other stuff, that's fine. That's how you roll. But if you're a trader, don't let this be your nightmare. Right? This volatility should be the best thing that ever happened to you since you're trading. But you have to be honest with yourself and accept what's going on the chart. Did we really think that price could come back to this level? As far as I'm concerned, yeah, because as long as you keep breaking and failing, keeping in mind where you're trading on your volume profile, you already took out a level that we identified. Here's the other two we dropped down, which we may have done, I think, earlier this week or last week. As long as this trend continues, this is what we can expect. More of the same. We're not far from this level. And this level down here at 161 is right in line with the 100-day moving average. The 200, there's not enough time for it to show yet, but it would probably be somewhere in here if it were to appear. So what are we doing? We're tracking price, right? This is another structural level, and now that we've tracked it, it's basically given us a pretty consistent thing, move to trade. And I have a feeling that all of these things are going to look the same, unfortunately, right now, where everything finds a way to sell off. Let's look at okay, Solana. Let's go to the daily. So this is something that we've looked at quite a bit because I know a lot of you like to trade it, and it's actually has nice moves up and down, nice swings, and those are the things that you do like to trade. But let's look at what's going on. So on our weekly chart, we've got lit everything that we would be using. We have our script, 20, 50, 200, 100, 500, and 1,000 days. Price went where It went where it's been before. So if you have the most basic trading platform account, and is all, or even just something that you see online, and the only thing you have on your chart is candlesticks, then you could simply just start looking for these areas of where price has been before. So when you're looking at this chart and you see this taking place, just look to the left. You're going to see the areas where prices likes to hang out. And if it's a place that it likes to hang out and it's moving in a direction that's headed that way, chances are it will find it. That's why we drop this level down here, just to try and pick up support and resistance levels. Some of them are support, some of them are resistance. Price will be drawn to that level. We drop this one in here only because you got this big wick down here and then a little bit of action at this level as well, and just trying to connect some past price. Just drag this to the left and we'll cut across here. Right? That's really all we're trying to do. Let's just give ourselves an area that we can focus on. So you got nothing else on your chart, you're just looking for past price. Liquidity, whatever you want to call it, I don't care. As long as you know how to monetize it, that's all that matters. Right? And we're not doing anything here that is unorthodox or requires special tools. Everything we're using is available to you on TradingView or TrendSpider, whatever other platform that you want to use. We're not using anything that requires much that's proprietary. We have our script that gives us buy and sell signals, yes. But again, it's relatively simple. This level here was structural, just like we showed on XRP. This is a structural level. Price came back to this level for that very reason. It's been there before. Buyers and sellers have shaken hands in the past. Maybe they had a beer, I don't know. But they've been there before, and that's why price goes there. But what happens if you break structure? If we break structure, we open up a whole other can of worms. Because all of this level, would then become resistance. It could cause us to chatter sideways, or you get lucky and you get a big influx of money and price goes up and everybody just goes on about their day and pretended this never happened. Price is going where it's been before. And once you've seen this, once, twice, 3 times, it really won't take anything more than that to get you to the point where you're like, okay, I can't fight this. Right now, if we were trading this chart, what would we be saying? Back here, we'd be saying, look, there's your buy signal. You put your feet up on the desk. The divergence between these two levels holds. Price continues to trade above the T line, way up here, which proves to be a little bit of a top. Like, this is really not all that hard, right? Here's what makes it hard. Impatience, not having a plan, trading with too much leverage over too small a time frame, and not using stop losses and setting automatic targets to check you out. And why is that good? Well, would you rather check yourself out, between 20 and 30% profit on every trade, Or do you want to try and wait to squeeze out some crazy amount only to have time erode you and you get eaten up by retraces? Why don't you just take the 20 or 30 points 3, 4 times, 5 times a day, or however long you're trading, instead of waiting for 80%, 100%, 200%, or whatever you're doing? Build the bag. Right? You're not going to do it by swinging for fences all the time. Take the money when it's there. What happens when you break? Look at the support you get from the 50 on Solana. Right? And then when you break it, you come right back to the next level, the 100-day MA. Even on this pullback retrace, you spend a little bit of time there, a bottom and a top. Total capitulation though. And this is just a classic failed breakout. It's just on a weekly time frame. We show it on smaller time frames all the time. What did price do? Came back and took out the previous wave's low. What you see on one time frame, you will see on another. And it's not hard. Right? It's not hard. Not at all. Now, let's look quickly, and we're going to bounce around a little bit today because there's so much going on. This is oil. This is the chart we want. We want WTI. So again, we got everything on here, but we've looked at this chart a million times. But the reason that we do this live is so that you guys can go back in time, not only to revisit, some of the practices that we talk about, but to go back and have the ability to check, did price do what we thought it was going to do? And, using this monthly chart, we've talked forever and a day that as long as the divergence between the T line and the 5 EMA on the monthly remains in play like that and spread out intact, that trend is still good to the downside. All right, so now that I know that, because listen, we validated it on everything from 1 minutes to monthlies, so we start to layer on some of our practices. Well, have we broken a level and are we looking for another level? Yeah, what is that level? Well, here it is. 500 MA on the monthly chart. That's what's remaining. There's your weekly. A breakdown that starts on a daily, and then before you know it, when you look at the monthly, it's got the same look, or sorry, the weekly, and it has the same look, and then you start looking at a monthly with the same look. Like, what else do you need? The only thing that matters is what price is doing on the chart, because that's the only real truth there is. Right? It's the only truth we have. You got to block out the noise, and the noise is everything else that's not on here. It just is. We are causing ourselves all kinds of grief and anxiety trying to talk about where we believe and why price is going in a certain direction. And we can use oil specifically because it's one of those assets that no matter what's going on in the world, somebody seems to want to buy it. Just give them a reason, even if it's not a good one. But the chart doesn't lie. Like, I'm sorry, we've walked through this chart from, going back to September of 23, going, I don't know, on the daily chart, at $93 or whatever it was, we see this doji at the top of a bullish run, and that is not a sign of a continuation, especially when all the other momentum indicators were telling you were cooked. But nobody wants to look at that. They just want to talk about it's going to be 100, no, 150. Maybe we'll make new highs. I don't know. but they don't want to look at the chart. Everything that you need to know, and whether you like it or not, is on the chart. And if you are saying, well, I don't think so, it's only because you don't have enough understanding on how to read it yet. And I say yet because it's easy enough to do. It's easy enough to do. This is the US dollar index, DXY. We've kind of been in here over the course of the last few months. Do you think we nailed the ranges? Yeah. What else is going on in this chart that could be relevant to us? Well, maybe we found the 200-day moving average. Isn't that our basic bull-bear indicator for whatever asset that we're trading? Yeah. Well, we found it again. And now we have to determine whether or not we're going to trade in a meaningful way above the 200-day moving average. And what do I mean by that? Well, one candle above a level does not signal a reversal. You need to be able to establish that, yes, price is trending in the right direction. And sometimes we get a little overzealous, right? Now we're trading our own signals, so we're pretty clear here. We're taking our own instructions. But we have to be careful at the 200 MA because we know it's going to provide some sort of resistance. This level that we've dropped on here of past price is also a little bit structural. So think of it as price might be hitting its head on the roof and it has to kind of break through to get to the next floor. But if the dollar breaks out, where are we looking that it may want to go? Well, I'm taking the averages off here for a reason. So here's our current resistance, and we're kind of showing these two equal tops, and some will say, oh, double top, double top. We don't know what this is yet, but it's certainly two equal points in price. Could just be a little, what turns out to be a pause and retracement, and then you boot up and take out the highs. We don't know what it's going to be yet. But to the upside, what might it look for? Well, let's look at these levels. Here's the structural stuff that we talked about. And if we keep looking to the left, can we take the tops of these candles and the bottoms of these candles and, oh, what? You trying to tell me that it picked up the bottom here and the tops here and yeah. So just for shits and giggles, we can draw a line in here just to give us some sort of a visual that we know price has been there before in a support and resistance way. Okay? That's why we're doing it. Same like we've done down here. And that's, why price is spending time at these levels. The longer it's been at these levels, the more time it spends there when it revisits typically. So there's just one example of how you can start to pick off levels where price might want to challenge. Of course, you're going to look at the tops of these candles kind of line up here and here. So yeah, you would look at that too. Right? Again, let's drop on a 20 and a 50. Okay, so what do we know about the chart? We've broken the 50 to the upside. You broke the 20 to the upside. Now you're breaking the 200 to the upside. Does that kind of sound like bullish momentum? It does. Is there anything else on here that we're missing? Well, lo and behold, these longer term moving averages are where? Right in the neighborhood of where we dropped in this quick and dirty level, just picking up where price has been before. So whenever you see these benches of past price, liquidity, again, whatever you want to call them, and then you find major moving averages are in and around the same neighborhood, that area is likely going to be a draw for price at some point. So if price breaks out of your 200 and starts to, to move higher in the way that you would like, this would be a target. But nothing goes straight up and nothing goes straight down. Here's what you're looking at on a weekly chart. And this is why we like to do fractal analysis. Because on our weekly chart, we can see quite clearly that if we break through this level here, there's the 50. The 50 is obviously going to be a target. And on our weekly, what's up here? The 200, which is perfectly aligned with the level that we just dropped on the daily. So when you're able to align these types of things, that's the confluence that you're looking for, with the understanding if price continues to move in a certain direction, those are the areas that it will be drawn to. And it's a process, as you can tell, you know, a couple green candles, a couple red, but they hold the T line, the divergence stays in place, boom, you get a kick higher. Like, you know, you've got all kinds of information along the way that helps you as you're looking for these levels. The idea is to be on the right side of the trade all the time. Like if you're this, let's just go to a weekly or a daily chart. You don't want to be long in here, right? You don't want to be short in here. That's just silly. So just get yourself on the right side of the trade, and you know, use fractals in order to determine whether you're in fact on the right side, because you'll be able to look on different time frames to get an idea of where you're going. Now, pretty much everyone today wants to look at this chart. And this is your NVIDIA chart. And depending on when you got the news on earnings, you would have a different feeling about what was going to happen with the stock. And sometimes, just because you have good earnings, and this is why I'm a technician and not a fundamental trader, but good earnings, or a good narrative, or a good story, or a kumbaya session, or whatever you want to call an earnings call today, doesn't mean anything to me. Important thing is what the smart money is doing. And if you look at this 1 hour NVIDIA, you gapped up today, found the upper value range on that 1 hour chart. Here's a 15-minute, and completely capitulated. Just because something has good earnings, and this is why you know a lot of people don't like to trade around earnings, because you just don't know what's going to happen, because you can get surprised, and a lot of people would have been surprised by this. So good earnings report doesn't necessarily translate into price go up. A bad earnings report doesn't necessarily translate into price go down. And, you know, I remember when I was being taught, all of that stuff that we're talking about in between was referred to as the smart money. Well, earnings report was great, but why did it sell off? The smart money, quote unquote, knew something that you and I didn't know. Earnings were terrible. Why did price go up? Well, maybe the smart money knew something that you and I didn't. Like, whatever it is, it doesn't always translate to the obvious, especially in markets. Expect the unexpected, and expect it to happen at the time that you least need it to happen to you. And unfortunately, that just seems to be how things roll. This is NVIDIA's weekly chart. The last time we were in here, price was hanging around up here. And then all of a sudden, so basically price came back to where we were on Tuesday and has, just dumped since then. Doesn't matter why. I can hear it already. Why? What doesn't make any sense? Earnings were good. Price should go up. Doesn't matter why. I don't care why. I don't care what the CEO says. I don't even listen to it. It means nothing to me. It's just literal diatribe. Blah, blah, blah. The only thing that matters is price on a chart. My job is not to listen to them. My job is to monetize the chart. And listening to them does not make me better at it. It does not. All I know is that, here's a hard bounce off a major moving average. You can choose to take it or choose not to take it. There's your signal. That's the safe entry. Either way, all I know is that this is a buying range and this is a selling range. And price came back to the 20-day just like we said it was going to come back to. Because it was too friggin' far away from the barn. The horse is too far away from the barn. It's going to come back. Might take a while. Maybe it's spring. He's having the time of his life. I don't know. But eventually that horse comes back to the barn. It doesn't like to be too far away from places it's familiar with. That's what price is doing here. Now, if price fails, what's it going to do? Don't look at the symbol. Don't look at the time frame. Just pretend it's not there. What's price going to do if it fails the 20? It's going to come back to the 50. And what makes that more likely is this big-ass gap to the right, where you don't find any kind of relevant support until you get to the shelf. Remember, this is light trading. This is not a lot of love up here. Price went here, but the love didn't follow. If the love followed, it would just be concentrated blue, because that's where the density is. You fail the 20, this thing comes back to the 50. Is this the first touch of the 20? Kind of. It's had some support here, but if it fails, it'll find its way to the 50 or those, areas of past price that we can connect in a logical way, or both. It's a process. If it doesn't hold to 50, what happens? Comes back to the 100 or in and around this upper value range, because all of this is somewhat of a premium. This is where all the meat is. Where's the 200 on NVIDIA? $77. Now, I'm not saying that's where we're coming back to, but if you continue to fail level by level, that's how you get there. We show it on all these other charts on all these different time frames. So I don't believe this is over. We haven't produced a sell signal yet. I'm sure we have on the daily. Yeah, several days ago. So interestingly enough, there's your sell signal. It came on Thursday. Gap up on Monday. Back down. The bottom line is the trend never changed. The trend on NVIDIA was negative since Thursday. And if we rolled our time frame back on the 4-hour, we probably could have got an entry in and around up here. But bottom line is, this trend never changed on the daily. Now, is that one giant volatile candle? Yeah, but at the end of the day, we knew the trend was still down. And I was in a group this morning, and I said, does anyone think that the pop that NVIDIA got was a lot lighter than you expected? It was like 4 or 5% pre-market. Yeah, that's what I felt. Didn't feel like it had a lot of momentum to it, even though they had all that good news. So maybe the smart money knew something. Or maybe it's just tired. It doesn't matter. I don't care. The only thing that matters is that you have the ability to protect your risk, stay out of trouble, and monetize the chart. this is the top. People are going to decide whether to short it or not. Who knows? But if price falls, break one level, find the next, break one level, find the next. And when we talk about trading over levels in a meaningful way, whoops, I'm going the wrong way here. Let's look at everyone's darling Aster. So here is our daily Aster chart. Not a lot of trading here because it's relatively new. But we talk about trading over particular levels with meaning or in a meaningful way. Or if you're underneath certain levels in a meaningful way if you're trading in the other direction. But the objective here was to get above the 50, and you want to be able to trade above the 50 for a little while and get comfortable and feel that, yeah, this thing's got some teeth and it might want to run. Well, this is why we say that. Because when you're longing into resistance, particularly the 50-day moving average, which is the ICE, right? Those first attempts typically fail. And this one did just that. Now, it hasn't printed a sell signal yet or anything, but what we're trying to show here is this failure of the 50. And the big rejection is probably going to come right back to the 20 or so. That's what you can expect. Let's look at it on the 4-hour. Maybe we'll pick up a volume profile here. Yep. There we go. So, you know, we had warning. Came at, 2, 3 in the morning, but it came up here. And you broke one level and you found the next. You've broken this level and probably looking for this in here. I hate that this sounds so bloody simple sometimes, right? Like, people often complain that, oh, everyone makes the stuff sound so complicated, and then they want you to spend $500,000 to try and figure it out and sell you this and that and the other thing. This is not hard. Right? It's not real hard. Do what you're told, right? The market's telling us to do what we're told. Tells us to buy, tells us to sell. You can see all these sells at resistance. That's not an accident. You see these buys here trending at support, also not an accident. You're trending, you're on the right side of the trade. Getting on the right side of it is, in many cases, the biggest challenge for a lot of people, right? Getting on the right side. And you can see his ETH broke the 500, looking for the next level. Probably the point of control, in all honesty. Hate to say it, but that's true. Let me just take some noise off this chart quickly. So I understand that when price is whipping all over the place, or falling at a rate like it is, that it can make you feel really uncomfortable really fast. And hopefully, when you have an understanding of where price is likely to move, because you understand the ebb and flow, the inhale and exhale of the market, right? We didn't do anything. Like when we dropped this line down here, price was nowhere near. But here we are. Why? Because as the downtrend continues, you're going to look for that past price. And if it doesn't hold, you just continue to look for another level. This isn't super, super, super hard. Let's look at the SPY. This is the S&P 500. This is the daily. Similar looking candle to NVIDIA, really, right? But let's just not get sucked in by all of the noise in the market. All right, let's just look at the SPY chart on the daily. Actually, let me even knock it down to the 4-hour. Because I doubt many of you are trading those daily time frames. But just look at the 4-hour SPY. Like, you know, when we show the second tops all the time, right? As soon as I can connect, I don't even know what this is going to look like, but as soon as I can connect another top cleanly, I'll do it. May or may not be relevant. Sometimes it's incredibly relevant, like on oil, right? But all we're trying to highlight here is that, is this a lower high on the 4-hour? Absolutely. So if we want SPX, right? Let's just show a kind of quick comparison. This is going to be one big giant candle today, so it probably won't help us for demonstration purposes. But what we're trying to show you is the daily got you a sell signal on Thursday the 13th. The 4-hour gave you your first sell signal on the 4th. So what's the takeaway? The takeaway is that when you use multiple time frames, so here we're using the 4-hour and the daily as an example. If I'm trying to get what I consider a really good entry on a daily chart, I'm looking at the 4-hour chart. Simple as that. I'm trying to look inside that daily candle to see if I can spot anything that might tell me that price is about to do, you know, something that it might not exactly show up in that solid daily candle yet. So here's your entry on the 4th. That's your confirmation, so we're assuming that we're just going to use that as the example. There's your confirmation. So you're in on the 4th, short. That second top on the 4-hour, that's a lower high. I would even consider entering there, right? So, but nevertheless, you had an early entry, either a day or so before or several days before, by monitoring the 4-hour chart. Does every 4-hour entry turn into a runner? Not necessarily, but when they do, you'll be thankful you got the head start. Because once you're in early, before the bulk of the move has started to unwind, any kind of retrace that might happen after the major move kind of takes place, you're well protected, right? And we're trying to keep you from being stressed out all the time. So if you have a good entry, and that good entry protects you, this is a great example, isn't it? If that was your entry up here, this candle didn't hurt you. Maybe it would stop you out, but it would give you a chance to re-enter, right? So you have plenty of cushion because you had a good entry, and that's the important part. If you have a terrible entry or a late entry, and you're somewhere in here chasing the news, right? Oh, great earnings report. I'm going to buy calls. Oh, what's going on, right? And then everything reverses. If you have a good entry, you can afford to watch the market do its thing. But if you have an entry that's, just like everybody else's, probably not. Probably going to cause you a little bit of grief, right? Getting in here is okay. Adding here, I Like, I love this. I would have loved those those kind of entries, but nevertheless, you could get in here. You barely click a buy signal. There's your resistance, and the whole thing falls apart again. Points and flats, points and flats. There's your point. Points indicate big changes in direction. Why? Because they sense that influx of money quickly, and thus can pull an average up or down as well, just as fast, and that's why it points out. All right, so what else can we look at here that we have not looked at? We looked at Aster. We haven't looked at CFX. And again, I think a lot of these charts are going to look the same. Where's price going? Any guesses? You know, I'd be comfortable to say 071. And only because I'm just kind of lining up bases of past price and, you know, the bottoms of tops of other candles. That's all it is. Because that's just how what price will be drawn to. If we use drop down to the 4 hour, so, you know, looks like this wants to come back and take out these lows. Failed breakout at the 50. It's going to roll over in 0.8 on this time frame anyways. And again, we're going to see lots of this. Here's Monero daily. What's it looking for? It's looking for the 50. Why was these two candles that you see here, why were they so deep? This volume gap. This is the upper value range. The market didn't want to take it and pay a premium. Back here, treated it the same way. Nice big parabolic move to the upside, part of which contributed to this gap, especially this big candle here. So remember what we said earlier, you know, oh, this is exciting when price is doing this, but just remember there's going to come a time when you're least expecting it, or maybe even have forgotten about what happened on the left side of the chart, that you come back and revisit those levels. And all of this parabolic movement can come back and haunt you if you're not prepared for it. Take some of the noise out and just go to the weekly. It's a little more telling, right? All of this on the weekly is considered to be really light, like really light, with the bulk of it down here. And the point of control, that's picking up all of this past price and averaging it out. But here you were trading above the 20 and the 50 and the 200. This is a weekly, and this is Monero. Move up, nice bounce. Things very volatile. Big retracement, again, a bounce at the 50, and now a little more of a retracement to the downside. What's price likely looking for as it pulls back? It's going to come back to the 20 to test it. Any time frame, any asset, it'll all behave the same. So here we are coming back to the 20, and if it doesn't hold, that's why this level here, I guess, is that there's the 50 as well, and kind of picking up some of this from the past. Doesn't hold the 50, you look to the 200, which sits below the upper value range. And for price to come back to the 200-day moving average on a weekly chart is not some kind of crazy phenomenon. It's completely and totally expected and happens all the time. But we live in a world now where things just go parabolic and we get all excited about it. And then when price comes back and challenges those areas and then it doesn't hold up, well, all of a sudden there's tears. There doesn't have to be. The job is to monetize the chart, not to round trip things. So it doesn't matter what you're trading. There's going to be levels that you want to buy at. Isn't this the definition of consolidation? All of this in here? Yeah. Acceleration? Yeah. Is this an exhaustion phase kicking off? Could be. We just, again, we don't know what comes after this weekly candle until we see the next one. Is all we can work off of are the things that we can see on the chart. Here's the point in that EMA that's telling us you've got a sudden change in price, right? That's what's causing the point. And then in the candle itself has broken the T line. It hasn't triggered a sell signal or anything like that yet, but it certainly has broken the T line. And, you know, maybe we're looking for, again, that 20 MA. None of these things I know are comforting to, to people. And here's micro strategies, or whatever they call themselves today. Are we... You guys remember this, right? What's going on here? Why did we do this? Why did we circle these tops? Because it was an identification of past price that lines up with a major moving average. So as price is falling, break one level, find the next. Break that level, find the next. Through all of that, as we broke level to level, is all you had to focus on was the divergence between these levels, because that's telling you that your trend is intact. So as you're looking at this chart kind of in real time, I'm just going to blow it up for you a little bit. As you see that divergence take place between the T line and the 5 EMA, and you're breaking levels, that is the ultimate position to be in. You know, this just happens to be to the downside, so you'd be short. Right? Trading above all the support, you come back and test some, and then you fail it. Drop down to the next level, test that for a while, and then fail it. Short-term averages crossing down through longer-term averages. That's never bullish. But this, we circled this because this is an area there's some concentrated price. I like these kind of impulse candles that have these equal tops. And if the trend down was to continue, that we would likely find that area. And we're in it now, right? We're already in it. So here we are. There's our 200. This is the line we drew just to kind of trend it forward. Fallen into this gap. Like, you have no hope. When you're trending down with momentum like this into these gappy areas, there's no hope. Why would you be long here? And if you're not looking at this weekly chart and you're trying to long these red weekly candles off the daily or 4-hour or 15-minute or hourly or whatever you're trading, you're going to get killed. You have to have an idea of what's going on these longer time frames. Like, that's pushing water uphill. The literal definition of pushing water uphill. Here's the daily micro strategy. So same chart, same lines, right? There's our circle we drew that we showed on the weekly. There it is on the daily. And what's this? 1,000-day moving average. Do you think Michael Saylor is looking at the 1,000-day moving average? No. Michael Saylor is just looking at Michael Saylor. Right? That reflection in the mirror that he can't get enough of, right? What he should be doing is looking at the chart. Sorry, Michael, but it's true. Trading above all support, You come back and you test the 20 and you fire off a sell signal. You break one level, you find the next. What's that, this thin blue line here? This is the upper value range. So even though the volume profile is not in view, this here is the upper value range, and that there is the point of control. We always know that. That's where price got a little love. Why? Because it's been there before. Right? But when you break that level and you break and you find the 200 and you break it, the 200 is our most basic bull bear indicator. Down, down, down. You find some resistance, you fade. What did you fade to? What's this? Point of control. Boing. Pop up to what? The 200 and the 50, at which time you do what? Fail. This is what's important. What we just showed you. Not what Michael Saylor had for lunch or any of his friends. Or what we pontificate about what the future of XYZ asset is going to be based on stuff we have no freaking influence over or any idea of what we're talking about. It's a hell of a lot easier just to read price on a chart and count your money. Ignore the chart, lose your money. It's up to you. We're here to fill your... You don't need a pickup truck full of fancy tools. You just need a nice toolbox with a very reliable set of tools. That's all you need to do this. You want to get more sophisticated? Go ahead. Will it pay dividends for you in the end? Who knows? But we're giving you a drop dead ass simple way to monetize the chart. The only thing that's going to get in the way of that success is you. By either not doing what you're told, or trying to front run the chart, or spending too much time listening to other people talk about what the hell they think is going on in the world. That you can't monetize for another 18 months. You live in the here and now, and you have to trade what's in front of you here and now. Don't make it any harder than it needs to be. Is this chart a short or a long? Right now it's a short. The price of Bitcoin tomorrow is irrelevant to me. Like the price of the stock market or oil is irrelevant to me. I could care less if it goes up or down. I really could. I don't care. I am indifferent to price and its direction. Find a way to become indifferent to price. Because if you're not indifferent to price, then you're emotional. And if you're emotional, you're not making wise decisions. And in all reality, you're probably making mistakes because that's what the emotion does. Take the emotion out. Whether you want to trade spot, trade perpetuals, whatever it is you're doing, do it like you're a professional. Be serious about it. What you're going to learn doing this, whether it be in this place or from me or from anybody else, what someone can teach you, and if you have the ability to learn it and apply it, no one will ever take that away from you. The skills that you're gaining here and through other people will be with you forever. And it's an opportunity to make a difference in your life. It really is. I wish I would have known how to do this stuff when I was a teenager. That would have been ideal. And if I would have known what I know today as a teenager, or at least started to learn it as a teenager, I know for a fact that my life would be very different. It would have gone a different path. Not that the one it took is bad, it's not. But it would have taken another path. So if this is stuff that you love to do, like if you're fascinated with how price moves on a chart, I've got all the time in the world to help you kind of put some structure around it, and maybe you'll modify it over time and create something of your own that is even more comfortable. That's kind of what I did. You don't need a degree, you don't need to be a math genius. Is all that you have to do is listen to the chart. It's a language. Math is a language. This is a derivative of mathematics, and it's a language unto itself. So that's all that you need to do, is to be able to read the language. Now, I know that we have some people in here that have been trading Lily from time to time. So here's our Lily chart, guys. There's our trend line, and it looked like it was providing a pretty good indication of the direction that price was taking, until it started to show something else. Now, we have no idea why all of a sudden price starts going higher. As all we know is that, well, that's obviously buying, right? And we know that we have a signal, it's time to get in, and we know that we have this divergence. As long as it holds, we can stay in the trade. So again, the why price went up in broke trend, I don't know. Maybe the smart money knows something, and that smart money is the those that know everything that's on the chart and then some. The then some is what we can't see. What's the wick do? Does that red candle mean sell? Oh, I saw a red candle, I'm going to sell. No, all that candle did was come back, test the T line, which is a completely appropriate thing to do, tested the T line, and then pushed higher to close above both the T line and the 5 EMA. And to me, that's a bullish candle. And again, this divergence is still intact, telling you that your trend is still good. And here we are. Now, interesting time to look at this Lily chart, because here we have a little doji candle, and we're only halfway through the day, so this could look totally different in an hour. But what do we often look for when we see dojis at the top of these bull trend moves? They often can indicate changes in direction. So this thing's been on fire. So what we're looking at here is stochastic RSI, the Fisher transform, and the MACD that we use regularly. This is the money flow index. This is an indicator that you can get up from the from TradingView. Just click on the indicators thing and you'll be able to find it. Money flow index, and basically it's showing you quite just what it says, the money going in and out of the asset. And you can see right back down here, all of a sudden, boom, the buyers came in, and that was in towards the end of October. But really the move starts back here, right? This is a trend move. If we look at the daily, or the weekly rather, you're going to see even more clearly. Gotta love those those bottoms like this on those reversal candles. That really starts to kick it off. But here's your move, right? There's where you get your real solid green candle, and you're still pumping. This thing is still diverged and open, which is telling us it's bullish. Is this candle a little far away from the 5 EMA? Yes, suggesting that maybe price might want to come back and kiss it at the very least. Sure. Right? You don't want to see them just continue to spike like that, because the pullbacks are terrible. Really painful. So this Lily chart is still, I don't know, we can look at the monthly. I don't think it's going to help us, but look at that. Like, we're in, this is what price exploration looks like, right? This goes back to the 70s. That's, certainly took out the previous wave's high, didn't you? So, yeah, where this goes here, who knows? The reality is that the momentum is still higher on the monthly. So it looks like there's still a little bit of gas in this tank. As crazy as that sounds. Look at your doji. So this is how you can be long and short an asset at the same time. Like you might be over a longer time frame or a longer window, long Lily, but occasionally, short it or hedge it to protect your position or to, just find a way to monetize that chart. But this thing has just been a beast. Let's take a look at Apple. Now, Apple's like its little, I know a lot of the NVIDIA's kind of sucked a lot of the air out of the room as far as narrative and money goes, but for some reason, Apple just continues to chug along. But it does have its pullbacks, and it's another one of these stocks that is trading in an area, like you'll see here to the right, that is in light trading that's well above the upper value range, so it's somewhat of a premium. And the real interesting thing is that when we look to the levels that we normally look to, like our point of control as an example, it's sitting here at 200 bucks, $202, something like that. So does that horse sound quite far away from the barn? Yeah. Right. So, but the POC, and we know how much price likes to come back to the POC, is a mile or two away. But if we throw a little bit of context on this chart, and let's just drop in the 20, because we want to know, are we getting a continuation off the 20 like we have several times? Or is this going to turn into something a little bit different? And a little bit different would be it fails the 20 and look for the next level down, which is the 50. So, how do you look at this chart? You have a sell signal. Today's a volatile day, so we're going to have to kind of average all of that nonsense out. But you have your sell signal. You're aware on your volume profile that this is light trading and price can move up and down quickly through light trading, and you can see the gaps. So just like how price can, drop into this gap or move up into the gap quickly, it can do the same or will do the same in this light trading, but exponentially quicker, because there's just less volume to start with. So where's the 50? It's basically on the shelf of the volume gap. There's a shelf, and this is the shelf in here. So in order to get to the 50, you're going to have to fall through that gap. But does that mean you're done? This could just simply be the first touch of the 50-day moving average on Apple since you broke through it here. You gotta love green candles at the 50. I wake up for those. So that's your first, that's when you broke out. This would be your first touch. First touches typically get some support, or they may bounce. So again, we don't know what's coming after the current candle that we're looking at. Is all we can do is basically go off of what we can look at. If I take the candles off this chart, I do have some divergence between my T line and 5 EMA that's opened up. right? Taking off the candles helps because you'll get that green candle, red candle, green candle, red candle, and it's just chaos in the mind. But right now, that divergence is there, which is what I want to see if I'm short. And the other thing it's doing is breaking like another level, the major moving average. It's breaking that, and that's kind of relevant to me. But taking the candles off helps. Because if we come back in, a month and we're looking at 30 candles that have done this, right, and we have this divergence that we noticed up here, quite often, it can start at like this top and just unfold to the downside. This is what I'm paying attention to, is the trend. Is price important? Absolutely. But you have to be on the right side of the trade. Once you're on the right side of the trade, you can manage it from there. But getting you on the right side of the trade early is actually really important. If you get on the right side early, it's going to take out a lot of the chaos from your decision making. So here's Apple. Daily chart, breaking the 20, the 50 is beneath you. You're into a gap if you fall into that level. But if you don't hold the 50, Houston, we have a problem. Right? This is your upper value range. Remember that. And here's your 200 MA. To hit the 200 on a daily chart is a normalcy. That's not something that is uncommon at all. The 100 may provide something, but there's price. Now let's look for these areas of past price. So here's our 50. And here's this bench cutting through. So you got these tops cutting through here to these bottoms. And when we look to the left, lo and behold, here's this top. So yeah, there's some past price back here. There's some levels that we can look at. Let's just drop this in for fun and see where we end up. So we have kind of this structural area in here. We have the 50 MA. So again, we have this past price, which we know price is drawn to. What else would we be looking for? Let's say we were to fail that level. And we don't do this because we want gloom and doom. We do this because it's our job to understand where price has been and where it has not been, so that we can determine where it might want to go next. And when we start using, this tool of trend, it helps us set targets on the way down. And they're not carved in stone or anything, but you have to have a plan. So one level, next level, break that. This is a likely level in here. It just so happens that there's a major moving average there, not an accident. 200 MA, also not an accident. So here's Apple's weekly chart. Are we trading above all our support? Yes, we are. Is it uncommon to come back and tag the 20-day moving average? Like, is this horse far away from the barn? It looks that way. At some point in time, will he get tired and want to come back and take a rest? Probably. That in combination with, running around in a pasture of light trading, he can make it back to the barn real quick. And these are just levels. The weekly charts are going to take out a lot of noise because they're going to spread that intraday and daily nonsense out. But this is a pretty clean chart. And what happens when you kind of go parabolic and price gets driven up quickly with velocity and momentum? You spread out your major moving averages, which you come back and check those levels on the way down. This happens all the time, right? This is not stuff that's a phenomenon that only happens once every 100 years. This is something that you should expect to see on your charts all the time. And I'm going to say it again. Don't believe that price can't go to the places that look absolutely impossible for it to go to, because it can and it does. Right now, I know some of you at one point were trading CGC, which is the canopy growth, thinking that it was bottoming, and that, you know, how much lower could it go, and that this must be the bottom. It could likely be the bottom. I don't believe it is personally, but this also could be dead money, right? So, you know, looking for charts that have, I'm just going to bring this into scale here, have some crazy, crazy highs. 500, almost $600, right? 590 something. In everybody's head, there's like, oh, if it went from $1 to $500 and I spent $100, like, you know, they start doing that kind of math. Like, just stop yourself. Take a seat. This is not something that, in my opinion, that you want to spend your time trying to trade. Right? Like, it's pretty clear, and I said it before, this kind of thing will break your heart. Right? Let it break somebody else's heart, not yours. You want stuff that has a nice ebb and flow of daily price action. Right? That's what you're looking for, whether it's Bitcoin or whether it's something else. But what you're looking for is that smooth price action where you can identify love this chart. So here's a 4-hour. Are you trading above all your major moving averages? In other words, are you trading above all of your support? The answer is yes, right? And this is why I like the 4-hour chart, because I think it, especially with Bitcoin, it seems to open up a window into Bitcoin's daily. So here's your buy signal. There's a nice little base of consolidation, and you get a buy signal right at a major moving average. And then the divergence opens up, and this is like a trend move to the upside. It's a real nice move to the upside. Like here you are at like 109 all the way up to 125. That's a great move. If all you were looking at was just the T-line and the 5 EMA, our filter system, you could easily manage this. Here we're using averages to give you an idea of where you might see a little bit of resistance and help you put in levels for targets. But price will not trade there forever. So yes, you're trading above all your support, and yes, that's a bullish chart. But it's when you say that, end it with 2 words. Is it a bullish chart? Yes, for now. Because everything in this business is for now. Am I in a trend move to the upside? Yeah, for now. Well, how long is that going to be? Well, until it's not. But now it might be a trend move the other way. So when you're trading above all your major moving averages like this, you know instinctively that when you break them, all of that support starts to become what? Resistance. So you instinctively know, hey, why are we on the 4-hour chart? Because we're trying to get a good entry on the daily. Do you think you would have accomplished that? I think so. Now, all of what was once your friend is now your enemy. Now it's resistance. But that's not a bad thing, because what we want to do here is we want to teach you how to monetize the chart in both directions. Like, that's really a big bone of contention for me, is that there's so many people that all they do is trade long because price has only gone higher, and they have no clue how to look at a chart from the other point of view. Well, you know, it's the same, just upside down. It's not that hard. It's really not. But if we use fibs, like so, fibs, fractals, filters. So fractal, what are we doing? We're trying to get a good entry on the daily chart. That's why we're on the 4-hour. We're trying to look inside that candle. Filters, we want to get on the right side of the trade at the right time. And we want to stay there for as long as we possibly can so that we can monetize the full event. There's our entry, 4-hour Bitcoin. Here's your exit up here. Now, because you were trading above everything, now it's all turned into resistance. And when you start to fail, you could easily have failed here, had a bounce at the 50, played around at the 20, taken it and gone off and, go to make new highs. But that's not what happened. You failed. So the takeaway is, I went gangbusters and now I'm failing. Okay. Came back to the next level because that's what you expect. Fail that average, you're going to come back to the next one. And then you fail that one. And you're like, now I failed the 50 and the 20. And you've got all of this divergence that you're being shown, right, to the downside, all in here. You knew the whole time that this trend to the downside was intact. Did you know you were going to get 2 big red daggers? No, you didn't know that. But you knew that the trend was to the downside. And price came all the way back. When you split major moving averages in half, that's some momentum to that. Where did this wick hit? Bounced off the 200. Right? Then you get this nasty looking thing that washes out everybody in both directions. But the trend held. Right? This is really important. This candle is going to make you question everything in your life. This will help you keep your sanity so you don't lose your nut. Right? Bounce up. What happens? There's resistance. What do you expect to happen at resistance? You get a little bit of a pause, and that's what you get. This is the 200-day moving average on the 4-hour chart. So by failing the 4-hour 200, failing the 4-hour 50, does that maybe mean that the daily is going to suck too? Probably. It's not going to be avoided. Right? So that's just using our filters and fractal analysis. We throw on our fibs, swing low, swing high. If we come back to 50%, well, that's a healthy, I can live with that. And if you bounce, especially, that's considered to be bullish. But you don't. You break that, break 618, and everything else that goes along with it. Not bullish. I think that when you look at this 4-hour chart, as it unfolds, okay, that's your top area. You break all your resistance. And you can see what happens, or all your support rather, and you can see what happens as it shows up as resistance now, right? Loved it here, but not getting the same kind of result. And every time there's a big failure, right? Failure at the 50. This is the 200 here, failing that. Like you can see where it has problems. All at resistance levels, those major moving averages, those benches of past price, those areas where buyers and sellers have shaken hands in the past. Now everybody today is going, oh no, big red candle, we're down again. Well, if you were following our system, you would have been short on the 11th at 7 a.m. off this 4-hour chart. You would have been short 9 days ago. 9 days ago, you would have been short. Meanwhile, everyone in the last couple days is, oh no, we have a problem. You were told you had a problem a long time ago. What you do with that information is up to you. You just have to know what you're looking for. And that's what we're trying to do. Show you what to look for. so that you don't get hit by something you didn't see coming, so that you're not a victim to the market, so you're not the one that's surprised. Do you want to know what's just as fulfilling? And when I say just as fulfilling, I mean there's that, that satisfaction that you get when you buy something and make a good trade. The satisfaction that you get when you take your profits at a top because you read the chart and everybody else is crying in their beer, that is one of the most fulfilling things you will ever experience. Knowing that you understood where to take money off because you were blocking out the noise and you weren't listening to other people's bullshit. You were simply reading price on a chart that was telling you as clear as freaking day, without hitting you over the head with the candlestick itself, that you had a problem and that it was time to go. Which one of those traders do you want to be? The choice is yours. You can be the manic, over-leveraged, short time frame trader that's always trying to find a way to refill the bucket. Or you can take a step back, understand that this is a language, and it's simple as hell. Current price revisits past, first attempts typically fail, break one level, find the next. And use the filter that we have to help you stay on the right side of the trade. You get a buy signal, you take it, and you stay in it as long as the market tells you it's okay to be in that trade until it isn't. That's it. That's the job. Nothing more, nothing less. And as price bounces around and throws traders everywhere, you can't be surprised. What's happening on NASDAQ's weekly? Price is coming back to the 20. Well, this is just like the Lilly chart for that matter, right? Nice move higher, trading with support, but eventually you're going to come back and you're going to tag these levels. If you don't hold it, you'll fall down to the 50. How do you get there? Well, there's that big ass gap, boys and girls. It's right there in front of you. You slip into that gap, you watch how fast price can move down, just as it does to the upside, except nobody wants to think of it to the downside. This is nothing new here. Broke one level, found the next. Broke that level, found the next. Oh, what's the risk? What's the downside risk? What do we look for before we look for opportunity? We look for the risk on the chart. So if I want to be long, what's the risk on the chart? It's an obvious question. Right? Well, first off, you wouldn't want to be long because you're operating under a sell signal and the trend is down, so you don't want to be long. Breaking all of this stuff, this big gap, 200 MA on a daily chart. The 200 tag is totally expected and it probably hasn't happened enough, and that's why we have these big moves. Fail this, you're coming back to the 200. This big gap, if you're not looking at the volume profile, it really does change how you're looking at this chart, right? You're spending, we're looking to the left, obviously looking for, those benches of past price, areas where it's been before, major moving averages. But the volume profile shows us where the money has and has not been. And in knowing where it has and has not been, we know where the opportunities are up and down. The ones that we can monetize with velocity, that's why I point the gaps out to you all the time, right? Because those gaps, geez, like, that's pretty ugly. You don't see that every day. But where did price fail? Right at the 200. A little bit of warning, but not a lot. That's the 15-minute. So that's an ugly 15-minute top there with the big point and these two equal tops, but was anyone expecting that? No. And look, we show this all the time. This is a completely batshit crazy chart with the velocity, but look, massive candles that break one level and they find the next. Here's the failed breakout, right? So here's the flush candle. This will probably, if you're running a stop or a trailer, maybe this would stop you out. Or it might scare you and you think, oh, we based out a little bit. That's a big green candle. I think I might take my money. But using this, you can see that this candle closed at the T line but did not break it. And then the following candle opens with that equal top, and this divergence like this is still in play. This is money for you guys. You don't have to run away and take your toys and go home. When this happens to you, and it will happen, look for this. Look for this divergence to hold. And then the following candle with that equal top. And the beat goes on. So this is a failed breakout. Came back down, took out the previous wave's low. This is some pretty, what you guys are seeing here is pretty significant. This kind of stuff doesn't happen every day. I don't know if there's any other questions or symbols that you want to look at. I think I've covered off a lot of the questions that were sent to me, other than the sky's falling ones. But it's just a chart, guys. All right, everything that you're looking at is just a chart, and these charts perform in the same, whether it's gold, silver, oil, stocks, crypto, doesn't matter. This is gold. We can talk all day long about should the dollar be backed by gold and all that stuff. You know what? I don't care. So all I know is there's a buy signal. Go buy some gold. Boom, boom, boom. Price goes up. That looks like a top. Go sell some gold. Right? Like, let's not make this any harder than it needs to be. You got to do you, but you can't do you amidst a herd of 1 million people shouting different opinions and points of view at you. Learn this stuff. Learn how to do it really well, and all that. It won't matter. You won't care. You'll laugh at those people talking themselves, navel gazing all day long, pontificating about what may or may not happen in the world, who sits where in what house. Who gives a shit? The only thing that matters is price on a chart. Learn that and you'll be okay. Don't learn that and you're probably going to get hurt. Simple or as complicated as that. All right, guys. So on that happy note, keep your heads down. Do what you're told. Follow the chart. Keep the leverage reasonable. Use your stops and don't take your eye off the ball. Block out the noise. You're going to be good. We'll see you next time.